The Japanese yen is at its weakest level in decades. The question everyone is asking is, will the US intervene again? To understand the answer, we need to look at the history. In 2022, when the yen dropped past a 150 to the dollar, Japan intervened for the first time in 24 years. They spent over $60 billion buying yen to prop up the currency. It worked for a while, but the effect faded. In 2024, the yen hit 160. Again, Japan intervened. Again, the effect was temporary. The core problem is the interest rate gap. The US Federal Reserve kept rates high to fight inflation, while the Bank of Japan kept rates near zero. When investors can earn 5% in the US and nearly nothing in Japan, they sell yen and buy dollars. That is the fundamental force driving the yen lower. So would the US intervene? The US Treasury has historically preferred a strong dollar policy. But when currency moves become disorderly, the US has stepped in. In 1985, the Plaza Accord brought the G5 together to weaken the dollar. In 2011, the US joined G7 intervention after the yen surged post-tsunami. The US does not typically intervene to weaken the dollar, but it has supported allied interventions. The key levels to watch are 155 and 160. If the yen breaks past 160 again, verbal intervention from Japanese officials will increase. If it moves too fast, we are likely to see coordinated action. The US would likely support Japan with public statements, but direct dollar selling by the US is less probable unless the move threatens global financial stability. Another factor is the political calendar. A weak yen hurts Japanese consumers through higher import prices. The Japanese government is under pressure to act. For the US, a strong dollar helps fight inflation by making imports cheaper, but it hurts US exports. The Trump administration historically preferred a weaker dollar, while the Biden administration maintained a strong dollar policy. The bottom line is this: the yen will remain under pressure as long as the rate gap persists. Japan will continue to intervene to slow the decline, not reverse it. US direct intervention is unlikely but possible if the move becomes extreme. The most likely scenario is more verbal intervention, occasional Japan-only action, and a gradual move higher as the Fed eventually cuts rates. Watch 155 and 160. Those are the lines in the sand. If the yen breaks through, expect fireworks. What do you think will happen next? Comment below.